Good afternoon. What a day. What a day. Opened up this morning, opened up TradingView. Markets were up. The Qs and SPY both at all-time highs, obviously led by NVIDIA. Its earnings, all of the semiconductors breaking to the upside, tech at all-time highs. And what a reversal. And it wasn't just some random time during the day either. It was a pretty consistent sell-off all day. Some data came out earlier today, but realistically, it was just a down day across the board. And as a matter of fact, the indexes, particularly the Qs and SPY, placed some pretty bad-looking daily candles here. A little bit of a bearish engulfing candle that we have here on the daily and the Qs, taking out a few previous few days of price action, the Qs as well, or excuse me, the S&P 500 as well. Not the greatest day following NVIDIA's earnings here. Some of this could potentially be, we were talking about this inside of the Discord earlier today, some of this could potentially be due to the FOMC minutes report coming out and just being a lot more hawkish than what JPow's original kind of FOMC announcement was. You know, when the last time JPow came out and spoke, he was rather dovish, actually, talking about how that there was virtually zero chance the next interest rate decision was going to be a hike. And, you know, the market immediately started pricing that information into the upside, and rate cuts started coming back into the conversation. And then the FOMC minutes came out yesterday, and it really was a lot more hawkish than what JPow was kind of, bringing into the market a week prior or 2 weeks prior. Many market participants were talking about that maybe the monetary policy wasn't restrictive enough, that absolutely there is an opportunity, or a potential, I should say, for interest rate hikes into the future. You know, is the market trying to price that in? Maybe. You know, it's impossible for me to know for sure. I'm kind of leaning that way because some of the interest rate sensitive areas of the market got hit the hardest, such as real estate got hit down 2% today, utilities down 1.69, small caps down 1.64. These are generally going to be responses due to the higher for longer interest rate argument, or potentially even an increase in interest rates. So I think the market is kind of pricing that in right now. It's kind of the way that I'm leaning, but that's not going to dictate anything that I'm particularly doing in the market. I'm going to continue to focus strictly on price and trend. And if things that we've been opening up over the last few weeks end up getting stopped out for either small profits, break evens, or maybe even some losses, I'm sitting on a couple losses right now that haven't been stopped out that I've opened up fairly recently over the last few sessions. I will be taking those. I'm not going to try to outsmart the market here. I think the one thing that stands out the most out of everything that happened today are the transportation. So something that you'll learn inside of TTI if you ever decide to come on over is old school Dow theory. You know, it's been around for over 100 years more. Charles Dow came up with the Dow Jones Industrial and the Dow Jones Transportation. And he has this idea, and if we actually bring it into I want to show you guys something really quick. Here's that Dow Jones Transportation. If we look at the Dow Jones Transportation and the Dow Jones Industrial averages, and we just look at the direction of both of these, what Dow said over 100 years ago was that when the market was moving efficiently, both of these indexes would be moving in the same direction. They don't necessarily need to be moving at the same rate of change. The slopes can be different, but generally those trends should be in the same direction here. And it's very obvious that the industrial trend is up. We're into all-time highs, and the transportation average has really sputtered out. And he would call that a time to be cautious. Now, I do want to point out that it's been this way for a year. So these are not signals by any means, but essentially what he did over 100 years ago is he theorized that, you know, when industrials were heading to the upside and transportations were either falling or potentially consolidating, he looked at this as a potential demand and supply side of the economy. Supply being the businesses that actually built all of the products, and the supply, or the demand side, were the transportation. When somebody would buy something, the railroads back in the day would have to go and send it out to them. So when one of those started to move opposite of the other, it was time to be cautious. Once again, not necessarily time to sell everything, but maybe slow down on buying. He said he didn't necessarily care if they were both going up or down, just wanted to make sure that it was efficient. Now, the reason why I bring this up is, bring this back into a single chart, you can see that there's very obviously a divergence here, that it's been going for over a year. So once again, this is not a signal, but this is information for us to understand the strength of the primary uptrend. Is it being or is it being, or all areas of the market, I should say, experiencing the same? And they're not. I mean, you have to call it the way that it is, that the transportations have been lagging. If we bring this back down into the single here, the chart that we were talking about inside of Discord today that I think is important here is IYT, which is your transportation ETF on iShares here. So if we go ahead and we bring in some of these indicators again really quick, I want you to notice something. This is, at this point, a negative year-to-date performer. Right, so IYT holds a bunch of different areas of the market. It holds freight, it holds logistics, it holds airlines, both transportation, like things like FedEx and UPS and stuff, but also passenger. It also owns things like Uber and Lyft and stuff. Now, right now, IYT is down on the year. So it's one of the more major areas of the market that has not benefited whatsoever this year now from the prolonged breakout that we've seen at the beginning of the year. The S&P 500 and the Qs and the Dow are all at all-time highs, but transportations are not following along whatsoever and are now actually negative. They're down about 2 or 3% on the year. We're also below the 200-day moving average for the first time since that October low of last year. And you can make the argument that maybe it matters, maybe it doesn't, but I think at some point the market's going to care about this stuff. This is potentially leading information, and although you don't want to front run this type of stuff, I have no idea where this is going to go in the short term. If trends continue and you want to make the argument that this is just a very prolonged uptrend, you absolutely could. And like we were just talking about with the Dow theory, transportations have underperformed the broader market now for over a year, and yet we're consistently hitting higher highs. I do want to point out that at some point, weakness in the transports, you could look at this as a potential beginning of a breakdown and some sort of head and shoulders with the 200-day moving average kind of acting as a catalyst. At some point, this will probably translate into broader weakness. It's just very, very hard to know exactly when or where that's actually going to come into play. If we look at general sectors here really quick, it was a relatively weak day across the board. Nothing really held up. Mag 7 obviously looks fantastic because NVIDIA held up. But outside of NVIDIA and some select semiconductor names, not a whole lot of stuff looks really good here. Don't want to sit here and ring the alarm that it's time to head for the hills already. We were just at all-time highs this morning, but I do think that this opens up an opportunity for some short-term volatility here. Tomorrow is obviously going to be low volume coming into the 4-day week of next week. Generally, Wall Street takes off this Friday for a 4-day weekend, so I'm not entirely sure how tomorrow is going to go. Probably going to see some sort of rally off of the low volume, a dead cat bounce or something like that. Does that end up pushing us back up into all-time highs? I honestly have no idea right now. Right now, I'm not willing to go and open up new positions. I've been opening positions for the last 3 weeks. In particular, I've been opening up positions over the last 3 sessions, and now some of these things are just underneath my risk-on levels, and I'm not the type of trader to add into weakness, and I definitely don't want to add into losers. I'm not that type of trader. I do not like adding into trades that aren't immediately working. I would prefer to just sit on my laurels and wait, and if I end up getting stopped out on some of these, I will. If you didn't check out earlier today, I dropped the Future Leaders Report. I talked through a bunch of positions that we're currently in right now, a bunch of positions that are on the books that you could potentially be looking at owning once they cross up and over their risk-on levels. I encourage you to go through. If you're signed up for the newsletter, it's sitting in your inbox. This morning, 7 a.m., I sent it out. Feel free to click through that, look at the chart, see how they did today, see if anything shows up that you like. If you're not currently subscribed to the email, link is in the description below. It's completely free. Feel free to sign up for that. Every morning, 7 a.m., I send you a new scan with some updates on what I think the market is doing. Hopefully, it helps you out. My name is Hamilton. I'm here with the Trading Initiative. I'm going to hop off because we have a webinar here in about an hour and a half that I'm still constructing. I hope this is helpful, these little daily updates here. Not a whole lot happening in terms of things we're doing today, but we are cautiously optimistic into the new highs. We'll see what is in store for us tomorrow. Talk to you tomorrow morning.